Ambarish Baliga, independent market analyst, who joins us today. Mr. Baliga, welcome to this conversation.
Good
This
evening.
is Vishwanath Nair. So let me take you through some of the questions that Neeraj had pointed out in his message.
Right.
You know, the first one specifically being with regard to what steam is left in the market and what Friday is likely to look like, the last trading day of the week. If you can tell us a little bit about how you see today's moves versus now what is upcoming. Do you think that there is still some steam left?
No, I think today's move was clearly unexpected. I don't think anyone really expected, a major move up, and that to this sort of a move. And if you see, it was a very sudden move. I think there were a couple of reasons. I mean, if you look back now over the last 3-4 hours, I think there were a couple of news which came, and Neeraj also made a mention about that. The first one was about expectation that China would cut rates for mortgages, and this could actually help spur demand in China, which again means that if the Chinese economy starts doing well, metals and the other sectors should do well, and that's one of the reasons the metal stocks moved up. The other news which was there, there was talk of some disengagement as far as the Chinese border is concerned. And I think this statement came from Dr. S. Jaishankar. So I think this was the other reason, for the markets to move up. And whenever there is a sharp move like this, typically it's those big boys buying the Nifty. And if Nifty moves up, immediately the arbitrage players come into play, and because of which the stocks which are underlying the Nifty, they also move up accordingly. So we have seen a major move up as far as the large caps are concerned, whereas mid caps, they like participated to a certain extent, but not in tandem. So I think looking at the sort of a move which we are seeing today, yes, I think it can continue for tomorrow also to a certain extent. I think we should be bullish as far as tomorrow is concerned. Basically because there'll be a lot of people who would have been caught on the wrong foot being short on the Nifty or short on the market. So I
Yeah.
think that covering also will come in.
Right. Just a little while ago, you saw news coming in from the ECB, one of the larger central banks cutting rates now because the inflation print is looking a little weaker.
Right.
Similarly, growth concerns are mounting. And later this month, you have the US Federal Reserve coming in with its own announcements as well. Hopefully, a rate cut is what the market is expecting.
Absolutely.
Yeah. So to your mind, with the easing cycle sort of being kick-started now, what is that going to mean for a lot of these large names that you mentioned earlier?
No, I think, we could see because of this rate cut, at least the market move continuing for at least for a while. But then I think one also needs to be, quite clear on the yen carry trade. That should get started. If that starts unwinding, I think that will be the biggest danger as far as the market is concerned. So that's something to be closely watched out for. Otherwise, looking at the sort of liquidity which is there in the market, we can see some more upside for a while. But then at the same time, the other thing which we should always remember is the fundamentals. I think, the valuations are getting stretched day by day. And even if you look at the latest quarter's earnings, which I think has been the worst quarter since COVID, but still, the markets move up because of liquidity.
So, coming to the domestic sort of trends at this point in time, you're seeing the inflation number that came out just about 5:30 today, pointing at a slight uptick, and the RBI governors, of course, pointing at you're likely to see inflation inch up again. They're not expecting FY25 to reach that 4% target. So, rate cut conversations in India seem to be put on the back burner, at least for now. So, do you think there's going to be that differential that will play out in the market as well?
Yeah, I think that differential will play out. I think, even the commentary which came from RBI governor during the last monetary policy, I don't think we are really in a hurry to cut rates here. Earlier we were expecting that RBI governor is waiting for Fed to start cutting rates. But even if that happens, like I said, we should see at least about a 25 basis points, if not 25, possibly 50 basis points cut as far as Fed is concerned. But when it comes to RBI, I think they will hold the horses at least till the end of the year. Possibly we could see early next year in case we start seeing inflation really settling at lower levels.
You mentioned about, and of course, Neeraj was also talking about the fact that China is looking at a potential rate cut. You mentioned the yen carry trade being one of the biggest risks facing the markets right now. Do you think that if a sort of stabilizing China, in case this rate cut does pan out and it helps China sort of stabilize that growth, the growth concerns that they have, do you think that that should be enough to sort of reverse the trend? If yen carry trade plays out at the same time?
No, at least for the time being, I think that should be enough. But then we have seen this sort of news coming from China a number of times. We have not really seen that growth coming back in China as to what we had seen in the last 15, 20 years. So, I mean, for that to happen, I really don't know whether just this rate cut will really help or not. But for the time being, I think it has helped the markets sentimentally to move up. But whether it sustains or not, that's a question mark.
I want to ask you last couple of questions. Firstly, what then should investors look out for tomorrow? How should they be planning their trade, not just for the day, but also for the months ahead, where things are likely to change?
No, I mean, for a short-term trader, clearly, I think one should go with the trend, and the trend is up right now, especially after today's trade. I think we should see the uptrend at least for a day or two, if not a slightly longer time. But when it comes to an investor, I mean, I think most of the investors have made much, much more than what they would have expected. I mean, like the last 2, 3 years have been superb for the markets. So I think somewhere we need to, like draw the line of greed and be happy with the sort of profits we have made. Take some profits home. That's what I've been telling everyone. That I mean, after a long time, we have seen markets like these, and don't expect the markets to last like this forever. I mean, there'll be a time when we will see a correction. It's quite difficult for me to say as to when, but then there are like a number of red flags all around. And only when the correction happens, then we look back and say, okay, I mean, that was a red flag which we missed out. So I think it's time to book profits, take some money home, at least take your capital out, because most of the portfolios have become multi-baggers in the last 3 to 4 years. So at least take your capital and your interest out and play with the balance.
Right, that old analogy of everybody thinking that they're going to constantly win at the casino. Maybe that's probably not the approach you should be taking. But you mentioned red flags, and maybe later on we'll see some red flags which could have been viewed earlier. But as of now, are you seeing something specific in the domestic markets?
I mean, see, look at our growth. When the corporate earnings, nothing too great. Like I said, it's been one of the worst quarters. Look at the GDP growth; it is lower than expected. Then, I mean, you look around now, the U.S. elections. I mean, earlier we were expecting that Trump will come back with a thumping majority. Now it doesn't seem to be. I think the cards have changed there. So that also could be a bit negative as far as India is concerned. So I mean, overall, if you look at the macro numbers, I mean, it's very difficult for these sort of macro numbers to keep continuing supporting the markets. And we should remember that liquidity is clearly linked to the sentiment. The day the sentiment changes for whatever reason, all this liquidity which you're talking of can disappear overnight. I mean, we have seen that a number of times in the past.
Right, Mr. Baliga, thank you so much for taking time out and talking to us today, sir. It was a pleasure as always.